The market has officially closed, the screens are dark, and the bustling newsrooms have gone quiet for the weekend. Most people think that once Friday rolls into the evening, it's time to put the markets out of mind, enjoy their personal time, and not think about silver again until Monday. But here's the truth that most silver holders have no idea about. While you relax, plans are being executed, moves are being made that will directly impact the price of silver before anyone even sips their first coffee on Monday morning. I've pulled the evidence, analyzed the patterns, and tonight I'm going to walk you through exactly what is happening behind the scenes while you sleep and why it matters for your silver holdings. Stick with me, because the next few minutes could change how you approach the market this weekend. I'm OG John AG, and welcome back to Let Finance. Right from the outset, I want to be very clear. What I'm sharing is not speculation. This isn't a theory, a fear play, or a guess designed to scare you into watching. I'm working with real, verifiable market data, and I've been tracking specific patterns over the last several weeks. These patterns tell a very specific story about how silver behaves during the weekend hours, when most of the public is off the grid and mainstream media isn't paying attention. And once you see this story laid out clearly, it will fundamentally change how you view the weekend as a silver holder. The assumption most people make is simple. Markets close on Friday, and nothing really happens until Monday. Phones go down, minds switch off, and silver fades from daily thought. That assumption, comfortable as it may feel, is exactly what institutional players are counting on. Because for them, the weekend is far from a rest period. The weekend is setup time. It's a window when positions are arranged, strategies are executed, and the groundwork is laid for where they want silver to open on Monday morning. So why does this weekend matter more than usual? The answer lies in the context of recent market behavior. We've just come off an extraordinary week in silver. Prices pushed to levels that triggered important technical signals, indicating tension in the market. Delivery channels were under extreme stress, showing the physical side of the market is strained. In Shanghai, premiums have been historically wide, signaling strong international demand for actual silver. Smart money positioning, the trades made by those who truly move markets, has been accumulating in unusual patterns. And then there's the options market, one of the clearest forward-looking indicators out there, which is pointing toward a very specific setup for the week ahead. When all these factors converge, technical stress, intense physical demand, unusual institutional positioning, and specific option setups, the weekend becomes the most critical period of the week. Whatever we see when markets open on Monday is being orchestrated in these hours while most people are unaware. Let me show you the first piece of evidence that caught my attention this week, Friday's final 90 minutes of trading. Most retail investors overlook the tail end of Friday, but the behavior here is telling. In those last minutes, institutions often paint the tape, executing trades that strategically influence the closing price. The close isn't just an arbitrary number. It becomes the reference point for weekend and overnight pricing, a foundation for the Monday open. And what I saw last Friday was unusual. The volume patterns, the price movements relative to the bid-ask spread, all suggested intentional positioning rather than natural market flow. Large players were orchestrating the close, deliberately setting silver at a level that supports their weekend strategy. This is the kind of evidence that makes you sit up and pay attention. This isn't coincidence. This is calculated preparation. Next, we have options positioning. Again, this is not something most retail investors watch closely, but it's a goldmine for understanding institutional expectations. Options provide the right, but not the obligation, to buy or sell silver at predetermined prices by specific dates. When institutions accumulate options at certain strikes, it signals not just expectation, but necessity. They need silver to move to those levels to support their strategies. What we're seeing now is an unusual concentration of call options. Bets that silver will rise at strikes significantly above current levels. And these aren't small retail bets. These are massive institutional positions. When large players buy calls at these sizes, they aren't gambling. They're making calculated moves based on analysis, and the conviction is clear. The bias is upward. The third piece of the puzzle is the activity in the Asian silver markets during Friday morning before U.S. trading began. Silver doesn't sleep. It trades nearly 24/7 across multiple regions. The Asian session, often quiet for U.S. eyes, can reveal early institutional maneuvers. Friday morning showed classic accumulation behavior, large buyers taking advantage of thin liquidity to build positions slightly below U.S. session levels. This kind of strategic accumulation is textbook institutional playbook material. The timing, right before the weekend, strongly indicates a deliberate setup. Now, let's discuss weekend futures trading, something many silver holders misunderstand. When the U.S. markets close Friday afternoon, silver doesn't entirely stop trading. Thin market activity continues on certain electronic futures platforms and in Asian markets. In these low-volume periods, it takes far less capital to move silver significantly. Institutions use these hours to preposition the market, establish technical levels, and influence Monday's open. Patterns in the data suggest this weekend we'll see active manipulation in these thin markets, setting the stage for a directional move when normal volume returns. So what does all of this add up to? Based on the Friday close, options positioning, and Asian session accumulation, here's what I believe is happening. Institutions need to shake out weak hands. They want retail investors who have been chasing silver higher to panic and sell. When that happens, institutions can buy back those positions at lower prices before the real upward move begins. The method is simple but effective. Push silver slightly down during low volume weekend hours, trigger stop losses, instill fear, then accumulate at the weaker prices. I want to emphasize, I'm not predicting a guaranteed drop this weekend. I'm pointing out a pattern consistent with engineered dips designed to flush weak hands before a larger move higher. This is critical for silver holders to understand and mentally prepare for. If silver dips this weekend or opens lower Monday, it is not a signal the bull market is over. In fact, it could be the last shakeout before the next leg up. Historically, the setup repeats. Markets are cyclical, human behavior is predictable, and institutional strategies are consistent. In past instances where I identified the same combination, Friday close manipulation, concentrated options calls, Asian session accumulation, thin weekend liquidity, the result was usually a weekend dip or sideways chop, followed by a significant upward surge once full market participation resumed. The last time this happened, retail sellers were caught off guard, while those who held through the engineered weakness benefited from the entire move. The weak hands provided cheap inventory for institutions, enabling them to consolidate before the breakout. If you hold physical silver, here's the most important advice. Do nothing. I mean that literally. Do not obsessively check prices this weekend. Don't react to temporary weakness in the futures market. Physical silver in your possession is real, tangible, and immune to the manipulations happening in paper markets. Its value remains intact, and fundamentals are strong. Hold it firmly. If you're monitoring paper silver, ETFs, futures, or other paper derivatives, understand the context. Weakness over the weekend may be engineered, not genuine. The key question isn't, should I sell? It's, do I understand why this is happening? A weekend dip in this setup doesn't alter fundamentals. Supply deficits are real, institutional accumulation continues, options positioning points higher, and Shanghai premiums remain strong. Context is everything. This is not just theory, it's the reality of market behavior under the conditions we are currently observing. Let's also outline specific signals to watch for over the weekend and into Monday's open. First, the CME Globex silver futures price as Sunday evening trading begins. If our setup is correct, you'll see stabilization or an upward bias as full market participants return. Sharp, high-volume declines, however, would indicate a different scenario and should prompt reassessment. Second, monitor the Shanghai market premium. If it holds or grows, that confirms strong physical demand and institutional conviction. Any sudden collapse would be a red flag worth noting. Third, watch Monday's U.S. market open, especially the first hour. Institutional moves set up over the weekend often reveal themselves here. High volume coupled with an upward move would validate the weekend setup. Low volume and sideways action would suggest the pattern requires more time. Over years of covering the silver market, one pattern has stood out. Moments of maximum fear, weekend dips, engineered sell-offs, alarming headlines during thin trading, are almost always opportunities for the disciplined long-term holder. Fear is manufactured. Fundamentals are not. The moves happening tonight while markets are closed are not random. They are deliberate, calculated, and designed to influence the next leg higher. Data, options, accumulation, technical positioning all point toward an upward trajectory. Understanding this setup is crucial to being on the right side of the market when it plays out. Before I wrap up, let me give you 2 quick practical actions. First, comment below. Are you holding through the weekend or nervous about Monday? I read every single response, and your input helps guide content and address concerns for the Let Finance community. Second, share this video with every silver holder you know. Text a friend, post in your group, share on social media. This analysis can make a tangible difference in how someone manages their position over the next 48 hours. Sharing it ensures the community grows and more people are informed. Stay subscribed, keep the bell notification on, and know that I will be monitoring these markets all weekend. If something important happens, I'll be here to cover it. You're not alone. We watch, learn, and position ourselves together. Stay smart, stay physical, stay stacked, and I'll see you on the other side of the weekend, ready for what Monday brings.